How you doing, everyone? This is one of those Mr. Short Dollar tutorial informative videos where we could discuss Schedule A, IRS Form 1040, basically the itemized deductions, how to fill it out, and how it's explained as well. Again, we get a lot of people reaching out to us in regards to itemized deductions, especially people thinking about different things that they actually can write off of their taxes, and those being itemized deductions they can apply for their taxes, especially charitable donations, things like that. But I want to do is introduce the form, explain to you exactly what the purpose of it is, give you some common deductions, and also explain to you when it's used, when it cannot be used, and also how it transitions back to your IRS Form 1040 for your tax return. Okay, basically what you see right here is the itemized deduction list. That be your IRS Form Schedule A for the 1040. These are the different sections: medical and dental expenses, taxes you paid, interest you paid, gifts and charity, casualty, theft and losses, other itemized deduction, your total itemized deduction right here on line 17, okay? And basically, the purpose of this form is used to list itemized deductions. Those itemized deductions are used when the total of the itemized deduction is larger than the standard deduction given by the IRS, used by the low, and then it's used to lower your taxable income. Okay, what we'll look at right here is I'm going to go to actually let me get right here first for you. If you see right here to your left, right here you see the standard deduction, that bottom left hand corner. What I mean by that, if you see those total amounts, that being single and married filing separate, 12,950, married filing jointly, 25,900, head of household 19,400. Basically, what this is stating, these are your standard deductions that IRS will give you to deduct against your taxable income, okay, or your adjusted gross income rather. What happens is, if the actual dollar amount for your itemized deductions, the total itemized deduction is greater than any one of these three numbers, depending on how you're filing, single, head of household, married filing joint. If the number is larger than one of these three numbers, then you will be able to itemize and use IRS Form Schedule A. If not, it'll be just behoove you to use the regular standard deduction. Okay. Some of your basic forms are items that be needed to fill out a Schedule A. That be medical and dental payments, mortgage interest statement, i.e. your 1098 mortgage statement, and they come from your actual mortgage company. Property tax records, that be income, personal property, and real estate, and charitable donation receipts. Okay. Some of your common itemized deductions, kind of what we just stated, being mortgage interest, property taxes, charitable deductions, medical and dental expenses. Okay, right here, guys, we have an example of a Schedule A, these itemized deductions, just like we went over there before when we talked about the different sections, the medical, tax you paid, interest you paid. If you see right here, right now, you see this section for taxes paid. We have a listing of state income taxes coming in, also real estate tax, that being i.e. your property taxes, totaling $12,904. You see in the next section for interest paid, 8A, 15,983. You see it goes over to the column to the right. Gifts and charity, $9,816. You see all the totals here. That totals $38,703. Okay, there we at right there. $38,703. Okay, this is the number that will flow back to the 1040 because this is our total itemized deduction, and because we're filing single, I think I had that checked on my example, the filing status, and where I didn't. We're just gonna match for single. But anyway, we already know that number, the 38,000, is greater than any one of these numbers. So you automatically use that schedule A. And then we flow over here. You see number 12, line section 12 right here, standard deduction or itemized deduction. Again, because this number is greater, that's what the from the itemized list, 38,703 is greater. So we're going to use that number. And also they'll give you a chance to make an adjustment for qualified business expenses, which is irrelevant for what we're doing. You see right here, line 14, that total 38,703. Again, that's that total from your Schedule A. It flows right here. And what you look at this final number, that's your taxable income. But right above it, you see on line 11, that 190,875, your adjusted gross income. That's basically your total, all your income sections. Okay, that be it for real estate, property, business, real estate, businesses, different things like that. All those other things, stock sales, any kind of prop, all that your total income, and that's what you use to places apply these actual deduction from that, and that will give you your actual taxable income. Your taxable income is what's determined in regards to how much taxes you're supposed to pay for this particular income amount based on your filing status, be it single, head of household, married, filing joint. Okay. So again, if you look again, say line number 14, that's that total, 38,703. It's subtracted from line 11, the actual adjusted gross income, which gives us $152,172. That being our taxable income. And we looked at in regards to what we actually would owe taxes on, minus any particular credits that we may have. Okay. I hope that information helps you in regards to exactly what the IRS form Schedule A is used for and how this applies to your IRS form 1040. Again, guys, I am Deonte Burden, aka Mr. Short Dollar himself. Make sure you subscribe to the Mr. Short Dollar YouTube channel where we talk about personal finance, entrepreneurship, business, and investing. A lot of great information on the channel, a lot of great information coming down the pipe. Make sure you subscribe and look. I look forward to talking to you again soon. Take care.